Vedanta has declared a total dividend of 101.5 rupees per share in the current financial year. Yes, you heard it right, 101.5 rupees per share on a stock that trades at about 270 odd levels. Vedanta has been in focus for the last many trading sessions for several reasons, one of them being Vedanta Resources, which is the parent company of Vedanta Limited, and their ability to repay their upcoming debt obligations. Today, of course, the stock is in focus because the company has declared fifth interim dividend for the year to the tune of 20.5 rupees per share, which at the current market price entails a dividend yield of about 7.5%. The company will have to entail an outflow of 7,700 crore rupees on account of the fifth interim dividend that the company has paid. Let's have a look at Vedanta's dividend history then. For the current financial year, as I mentioned, the company has declared a total dividend of 101.5 rupees per share. In the previous year, the company had declared a dividend of 45 rupees per share. For the prior 2 years, the company had declared a dividend of 18.5 and 9.5 rupees per share. The increase in dividend that we have seen over the last 2 years is of course on account of the commodity upcycle that we have seen post-COVID and the consequent increase in earnings cash flow that the company has seen. Another reason is of course the debt obligations that Vedanta Resources, the parent company of Vedanta Limited, has. Remember, on account of the fifth dividend that the company has declared, Vedanta Resources will get about 5,300 crores, which will help Vedanta Resources repay its debt obligations, which has been a major concern. Vedanta Resources had promised to pay about $4 billion over a period of 3 years, out of which the company has already repaid $2 billion in the current financial year itself. The company has gone ahead on record to say that the company will continue deleveraging. It now has a total liability outstanding of about $7.7 billion, out of which $3 billion are outstanding in the upcoming financial year, that is FY 23-24. Let's also go a little back in history and talk about company's delisting plans. Way back in October 2020, the company had proposed to delist its equity share at about 87.5 rupees per share. The stock currently trades at 270 odd levels, which means that the stock has risen nearly 3 times since the delisting plan was proposed. Apart from this, the company has also given a total dividend of 156 rupees per share since then, which means if we calculate the absolute return since company's delisting plans in October 2020, company has given a total return of about 350 rupees per share versus the delisting price, which stood at 87.5 rupees per share. Let's also get into Vedanta's debt profile then. At the end of previous quarter, that is at the end of third quarter, company's total net debt stood at about 38,000 odd crores, which on a quarter-on-quarter basis had seen an increase of 18.5%. Now in the current quarter, that is in the fourth quarter, company has paid dividend twice. The fourth interim dividend was to the tune of 12.5 rupees per share, which entailed an outflow of about 4,600 crores for the company. The current fifth interim dividend that the company has announced of 20.5 rupees per share entails an outflow of 7,700 crores for the company, which means that on account of dividend itself, the company has entailed a cash outflow of about 12,250 odd crores, which could impact Vedanta Limited's net debt position at the end of current financial year. So that's the story as far as Vedanta's history is concerned. A whopping 101.5 rupees per share dividend which the company has declared in the current financial year, much more than the dividend that the company had declared over the prior years, mainly on account of commodity upcycle and the debt obligations that Vedanta Resources, the parent company of Vedanta Limited, has in the upcoming financial year.
If you like this video, then like, share and subscribe to ET Now.